If your real estate business does about 3 to 5 deals at the average of $10,000 per month assignment fee, what's going to be your personal strategy for the next month or 12 months? I'm sorry. Let's start with Chris Jefferson.
Yeah, I love the question. I think we've gotten to a space where everybody thinks you have to go out and have $100,000 a month wholesale business and all these different things. What I like about this is if you're doing 50,000, let's just say a month from wholesaling, to me, that's a really good, strong business that's bringing in some solid cash flow on a monthly basis. My strategy with that would be very, very simple. I would be out attacking seller finance opportunities. So I'd be looking for absentee homeowners that are of 60 plus age, that have free and clear property, and I'd be offering seller financing to them. I'd be using the money that's coming in on a monthly basis. So I have the opportunity to make down payments, opportunity to make my monthly payments, and I'd be wrapping the financing on those and creating win opportunities by doing that. I'd also be using it for sub two opportunities. We're in a falling market right now. So as pre-foreclosures become opportunities, the reinstatement costs for loans, the closing costs for loans to get these sub two opportunities to the closing table, where you then can have control of that property. That money coming from your wholesale business can be used for that. So we're at a period where stop using wholesale money to live off of, start using some of that wholesale money to reinvest to create some passive income.
Was that a 45-second buzzer or was that like a 2-minute buzzer?
It was a 45-second-ish buzzer.
All right.
So,
the champ has to get some
gets a
grace.
couple
The
seconds.
champ
That was like Eric Brewer like buzzer.
No. I had a request to cut back on the buzzering, so I got to play it across the board. Let's go over to Eric Brewer and let's get your thoughts on it.
So I think that's, I would agree with like most of what Chris said, except you heard him say he does everything in real estate. I think what's really difficult for a lot of folks like us, it may be difficult for us to remember what it was like to do 2 to 3 deals a month at that type of revenue. If you're doing 3 to 5 deals a month and making 50 grand, I don't know that I would change a lot. What I would be aware of is what about my existing business is no longer going to be profitable or as easy as it was before. And I would be selective about choosing maybe one of the things that Chris talked about. So I do think what you got to do is start to take your profits and reinvest it and learn how to make money when you sleep. But I would be very careful trying to do 6 different things at one time when you're doing one right now that's making you $500,000-$600,000 a year. Stay to your core and maybe plug in one thing. And I would say sub 2 or novations would be a likely addition to your already relatively successful business.
Okay. All right. RJ Bates.
Yeah, I'm going to mirror what Eric said there. I think if you're averaging somewhere between $35,000 to $50,000 a month, I think you need to stay laser focused on your wholesaling business because you're not great at it there yet. To go out and kind of mingle and other different things like seller financing and creative financing. Yeah, I think maybe you can add that tool to your tool belt, but you still need to be wholesaling those before you're taking it down and you try to become, the bank when you're seller financing or become a landlord or something along those lines. I think you still need to stay laser focused on becoming a great wholesaler before you shift your attention to something else. I think, there's going to be opportunities where creative finance is going to be more available to us over the next 12 months, but I think you just need to stay laser focused.
All right. And
quick
Steve
buzzer.
Trang,
I
let's go
must
ahead.
say on RJ's behalf, that was a very quick buzzer, by the way.
That was a 27-second buzzer.
Manny, is the camera on me? Can we switch the show? We are actually at 46.79 seconds, okay? I will not have my my stopwatch skills be questioned live on air. Steve, let's go ahead and conclude with you.
So my answer is gonna be totally self-serving. If you're doing 3 to 5 deals a month consistently, you're doing something right as far as marketing, right? So, obviously we all want to do 10 plus deals a month at some point, but 3 to 5 deals a month is actually pretty consistent. So I think the things you need to look at is increasing your margins. And so I would look at a couple of different options. I would say first and foremost, I say sales training. I think, being able to increase your margins from 10,000 to 15, 20, 25,000 is the first thing you want to look at. Second thing is I think that, Eric was on the show yesterday. We're talking about the Brewer method, innovations. I think that's another option to increase your margins. So I would say focus on your margins, not necessarily more business, but increasing your margins. And that's sales skills. So again, totally self-serving, but I think that's probably where you need to spend your efforts at the moment before spending more money.
Okay. All right, gentlemen, the floor is now open for everyone in the chat. The voting is now also open. So whoever you agreed with the most, go ahead and cast your vote for them. And let's argue. My favorite time. My favorite part of this.
So here's the thing I would say. The great thing about 3 to 5 deals is it's only 3 to 5 deals. You probably don't have a ton of employees, a ton of overhead, but you're also only 3 deals away from 0. That's a scary thing about only doing 3 deals to me. The cool part is it's low aggravation, low overhead. The scary part is you're 3 deals away from not having a business. So to Steve's point, I think what you can see is margins. If you were operating at 10K, that 10K could have been wiped out by the market. You better learn how to buy deeper. And you might only do 1 or 2 deals in the next 12 to 24 months. If they're $25,000 deals, you're way ahead of the game.
I didn't know that we're allowed to just do a sales pitch on our programs as our answer. Steve, good job.
Thank you. I was originally going to say another thing too is just surrounding yourself with the right people, right? Like, you know, if you get that kind of revenue, you could be joining a high quality mastermind, surrounding yourself with people that are A, you know, doing the things you want to do, or B, have experienced a slowdown before, right? Has experienced a, you know, whatever this reimagined recession we have, right? Like that's gone through something like this before. There's a couple of other options as well, but yes, thank you, RJ, for the permission to sell my own stuff.
Hey, look, so I don't think this concept or thought that you have to be a great wholesaler to do more than 5 deals is as big a deal as you guys are making it. Wholesaling is literally just for active cash. It's just to make cash. Like it's not this big, great thing. You know, it's a great opportunity to make money. I think what I'm trying to get the message across to people is that we're entering a unique opportunity where you can build out assets. If you've got a business that's bringing in revenue of, let's just say $50,000 a month, let's just say you're taking out of that to pay yourself $10,000 a month and you're keeping $40,000 a month inside your business. Your business now has $40,000 worth of cash on a monthly basis, all right, or roughly, where you can then reinvest that money into some long-term asset opportunities. For every 5 deals that come in, if you take 1 off the table and don't wholesale it, you keep that as a buy and hold, you keep that as a seller finance. That means every year you're going to bring 12 properties onto your books. It's going to bring you some long-term passive opportunities. So I don't know that you got to be the great wholesaler to try to accomplish that. I think we're at a period now where we're entering in where people can really build some true wealth. And we got to speak to that point for sure.
I think you're absolutely right. So Jason Medley is someone that he runs CG and someone I look up to a lot. And one thing he says is that the best way to generate great cash flow is to make a lot of active income. So I think that absolutely, CJ, the reason why we got into this business was to have passive income. But I think it's a lot easier to have passive income if we can increase our active income first.
100%. I do agree with you on that. You know, we have to have active income in place first. You know, a lot of people make that mistake, to your point, Steve, where they try to chase, and I think that's what y'all were all saying, right? They'll try to go chase passive and active at the same time. You truly do need to build active income first and have a strong, solid baseline of active income before you really start pursuing passive income. Because if not, you'll end up getting into trouble somewhere down the line where you need money that you just won't have consistently coming in.
Hey, Eric, I'm going to call you out on my team's behalf. We need you in the middle of the camera.
Yes, please.
He already said thank you because I moved to the middle, dude. It was 4 minutes ago.
I know, but then you moved back.
It's plugged in.
I hate to buzzer beat your positioning, but it's gonna get one. We'll get you shifted whenever we can. That'll conclude the first round. The first question, it looks like RJ Bates comes back with a big round 1 win. 45% of the voting goes to RJ Bates. Welcome back, man. Welcome back.